The world's richest nation just lost its economic crown, and no, nobody rang a bell, nobody held a press conference. It happened in the data, quietly on a Tuesday, and most people still have no idea. Here's why that matters to your money right now. On April 1, 2026, the IMF's Interim Purchasing Power Parity Update confirmed what economists have been whispering for 2 years. China's GDP on a PPP basis hit $38.4 trillion. The United States sits at $30.1 trillion. That's not a rounding error. That's an $8.3 trillion gap, and it's widening by roughly $600 billion a year. But this isn't just a scoreboard. This is a rewiring of who gets capital, who sets prices, and who writes the rules of trade for the next 50 years. And right now, the winners and losers are separating at terrifying speed. Let me give you the fact bombs. Fact 1. In Q1 2026, China's industrial output grew 6.8% year over year. America's contracted 0.3%, the first negative print since the 2023 banking scare. Fact 2. Saudi Aramco began settling 22% of its crude oil contracts in yuan as of March 2026, up from 14% just 9 months ago. The petrodollar system isn't dead yet, but it's on a ventilator. Fact 3. The BRICS New Development Bank approved $47 billion in infrastructure loans in the last 12 months. The World Bank approved $38 billion. Read that again. A parallel financial system just outlent the institution America built after World War II. Fact 4. U.S. Treasury yields on the 10-year note hit 5.14% last Wednesday, the highest since October 2023, because foreign central banks are net sellers of U.S. debt for the 7th consecutive month. Japan dumped $62 billion in treasuries since September 2025. China offloaded another $41 billion. Fact 5. The dollar index, the DXY, dropped below 97 on March 28 for the first time since early 2022. That's not a blip, that's a trend. So, who wins? Let's name names. KTL, the Chinese battery giant, saw its market cap cross $220 billion in March after locking in lithium supply deals across Chile, Indonesia, and the Democratic Republic of Congo. BYD delivered 4.1 million vehicles in 2025, overtaking Toyota globally for the first time ever. Tencent's fintech arm, WeBank, now processes more cross-border microtransactions in Southeast Asia than PayPal and Wise combined. And the losers? Boeing reported its 6th consecutive quarterly loss in February 2026. Ford announced 4,400 additional layoffs on March 18th, citing EV transition costs and shrinking export demand. Goldman Sachs quietly shuttered its Shanghai macro trading desk, not because China isn't important, but because they couldn't compete with local players anymore. Here's the money angle your portfolio needs to hear. The signal right now is sell US. Long-duration treasuries. The math doesn't work when your biggest foreign buyers are walking away. Rotate into commodities, specifically copper and lithium ETFs like COPX and LAT, because every new factory China, India, and Brazil build requires tons of both. If you want equity exposure, wait on broad U.S. indices. The S&P 500 is trading at 21.6 times forward earnings with declining revenue guidance in 38% of its components. That's not a buy. That's a trapdoor. Now here's what the media is completely missing. Everyone frames this as America versus China. It's not. The real shift is the rise of the middle powers. India's GDP growth hit 7% in Q1. Indonesia just crossed $1.6 trillion in nominal GDP. Mexico's nearshoring boom pushed its manufacturing PMI to 54.7 in March, a 19-month high. The power isn't just moving east, it's fragmenting. And fragmentation means volatility, which means opportunity if you know where to look. And now the wild card nobody is talking about. Artificial intelligence infrastructure spending. Microsoft, Google, and Amazon collectively committed $187 billion to AI data center buildouts through 2027. But here's the twist. 44% of those new facilities are being built outside the United States. Malaysia, Spain, Saudi Arabia. The cloud doesn't have a flag. And the nations offering cheap energy, fast permitting, and tax breaks are capturing the single biggest capital expenditure wave in human history. The US isn't losing just factories, it's losing the future's infrastructure. This is not a slow decline. This is a fast restructuring. The money is moving. The alliances are shifting, and the window to position yourself on the right side of this is narrowing every single week. If this opened your eyes, hit like and subscribe. We follow the money, so you don't have to.